Hey, folks. Good morning, good evening, good afternoon. Kamari Ellis here, the Finance Rebel. Welcome to another edition of Wealthy Wednesdays. How's everybody today? Man, what is going on there? There we go. My apologies. I was a little late, little delayed. I was actually doing another podcast called The Women of Real Estate, and so I got a little delayed. The conversation went a little long. Again, I apologize. Wasn't my intention. Just kind of happened. Sometimes these conversations get really, really good, and you lose track of time. But at any rate, we're here. I'm here. Going to answer some questions, see what folks want to talk about today. I actually had a couple of questions already lined up to talk about as well. Got some pre-show questions, and so I'm going to read those off real quick. Just give me a second. I'm sharing this out to all the regular places that I usually go to. So again, how's everybody? Miss Edith, I see you're playing dominoes with your grandson. Hey Tara, how you doing? Hey Tiffany, how you doing? How's everybody today? Do me a favor while we're doing this. Remember, the Finance Rebel Show is all about increasing your financial IQ. And so, since we're trying to increase financial IQs around here, do me a favor, share this, right? Help me fight the algorithms because they don't be sharing my stuff, y'all. They got me blocked or something. I'm looking at performance of videos and they've been going down, down, down. I don't know what that's about. It seems like a lot of the regulars, even some new folks, have been joining us. But help me get this message out to everybody who we possibly can get it out to. Everybody who wants the message of financial IQ, of financial independence, of financial independence and financial freedom. So thank you, Tiffany. Appreciate you. Appreciate you sharing, as you always do. Doing my, how are you? So how's everybody today? Check in with me. What's going on? What's new? What's popping? Like I said, I'm going to share this to a couple places real quick. Again, like I said, I have some questions queued up. I have to go get them. I think I can find one over here. One was about using your 401k to pay off your student loans. What do y'all think about that? Would you use your 401k to pay off a student loan? Do you think that's a wise move? I'll give you my response to that question real quick. Don Johnson, how are you, sir? What's new in your part of the world? I ain't seen you on Twitter all week, but you know what? I ain't really been on Twitter all week either. As we're getting set up and as we're getting started, I want everybody to remember that the tax deadline for those who filed extensions is tomorrow. It's October 15th. October 15th is the day. So if you have not gotten your taxes done and you don't plan to get them in, please know you're probably, if you owe money, you will probably be facing a penalty and a fine. All right. So let's make sure we get the IRS out of the way. Let's make sure we don't have no problems with the IRS because the IRS can mess up your whole life. All right. Now, that's not their intention, right? As long as you follow the rules, but it can be really bad if you go that route. So let's not go that route, folks. Let's be smart and let's put all our time and its energy and focus on building wealth. Because if you're busy, stuck up, fighting the IRS, you're not really going to be busy building wealth. All right. You're going to be busy fighting and defending yourself from getting taxed a whole exuberant amount of money. Now, I am not the fearmonger, right? The IRS does not send people to prison just willy-nilly like that. It takes time, but it does happen. I don't know if anybody saw this article. You know what? I'll pull it up in just a second. But it's about a high-ranking official that got an IRS lien put on them. And they actually are very important to our community, the Black community. And so, you know, we don't need those kind of problems. We don't need that kind of smoke. We need to make sure all our stuff is right and exact and put together in a great fashion. So we don't have to deal with those kind of problems. All right. So as we're getting ready, do me a favor, Put your comments or questions in the comment section as we get ready to get going. I'm also getting ready to get up on IG as well. Let me get this question. Somebody help me out. I was asked a question on Instagram. I didn't write it down. So it says, "Good afternoon, Kamari. Hope you're well. Wanted to submit a question for tonight's Wealthy Wednesday. With dividend investing, would you recommend picking individual stocks or an ETF like VYM?" So somebody remember that for me. ETF stocks or single stocks. So it's ETF versus individual stocks for dividend investing. So give me 1 second. I'm just writing that down so we can make sure we address that. And then now I will go live on Instagram, so nobody will say they felt left out. Yeah, Don. Yes, he got hit. Robert Smith, the richest black man in America, the richest black man in the United States. He definitely just got hit with a tax bill. He's actually just got indicted for the tax bill. What's up, Larry? What you doing, man? You up late tonight? You up past your bedtime? Man, this ain't working too good. There we go. So, all right. What's up, IG? How's everybody? But yeah, he just got hit. He just got hit with a vicious tax bill. They're trying to send him to tax jail. It's nothing nice. Mid-Atlantic, how are you, sir? It's nothing nice. He's doing a lot for the black community, so I do not want to see him go to jail. Hopefully he can do some type of settlement. He's actually been fighting that battle for quite some time now. Scotty Wins, how you doing? Welcome. This is Wealthy Wednesdays for everybody that's just joining. I am Kamari Ellis. The Finance Rebel Show is all about empowering and increasing our financial IQs. Do me a favor, share this out with anybody who you know that wants to increase their financial IQ, increase their financial education so they can empower themselves to take control of their money, right? Because anytime you take control of your money, you put yourself in a better position to make more money, to break generational curses, and to do some great things out here in the community. Real Estate Tracy, Brother Wayne 215. Shout out to Real Estate Tracy. He had a big announcement today. Did a whole press conference. Shout out to Tracy. Tracy is now the VP of Sales and Development at Mosaic Brokerage, right? So Tracy is out here doing the damn thing. I've been trying to borrow $1 from Tracy. Well, I'm actually trying to get her to give me $1. But she out here selling all these homes, but she a little tight with her money. And at some point, I've been trying to get Tracy on my show, but she ain't had time for me yet. So we gotta put the pressure on her, y'all. But no, in all seriousness, Tracy, congratulations. I'm proud of you. I know you've been hustling and working for this for a long time, and you are a testament of hard work and what hard work and what smart work can get you, because you need both. You can't just work hard. But I always say, if you're working hard, then you should be working smart. If you're not working smart, you ain't working hard. That's just my opinion on it. Y'all can tell me how you feel. So Cynthia Stanley says, congratulations to Tracy. Yeah, everybody say congratulations to Tracy. Tracy is my sister, my partner in the Black Wealth Project. Again, she's doing her thing. If everyone has not heard of the Black Wealth Project, the Black Wealth Project is something we all do together on Sundays at 7 p.m. We are the Black Finance Think Tank. So we're talking about Black wealth issues at kind of a 50,000 foot view. We will get a little tactical from time to time, but we're talking about the bigger issues and what we need to be thinking about as a Black community from a financial perspective, from a wealth perspective as we go forward. So again, congrats to Tracy. Brother Wayne 215, how you doing today? Okay, Monica, I see you. I see your question. Thank you for joining us. Katisa, thank you for joining us. Appreciate you all. Thank you, Doing Mine, for writing down that question. Now I'm able to go live on Instagram. So, all right, let's talk about Robert Smith. Y'all brought up Robert Smith. I am actually a Robert Smith fanboy. I like what Robert Smith is doing. Okay, perfect. This is wonderful. All right, so we just talked about Robert Smith. So he got indicted a little while ago for some tax things, right? Listen, when you try to make money or when you are making money, it's pretty regular to get visited by the tax people, right? So just keep that in mind. Tracy says, and a bunch of other people say, when you get new levels, you get new devils. All right, when you get new levels, you get new devils. The IRS, sadly, is a devil on every level. Typically, the IRS audits and prosecutes people that are poorer than the rich. But this time with Mr. Robert Smith, they reached a settlement. So here, I'm going to share that article with you all. All right, so Vista Equities. Now, Vista Equity is a private equity firm. Private equity firm usually is a company that will invest in known companies. Robert Smith does a lot of business with Adobe. All right. So it says billionaire is set to pay $140 million and admit liability for additional taxes owed, but won't be prosecuted. So he cut the deal. I'm not mad at that. You know why I'm not mad at that? Because the IRS and the federal government has like a 92% prosecution rate, and they have about an 85% jail rate. So I would rather him pay the back taxes, pay the fine, so he can keep his freedom, take care of his family, and keep being a great role model for Black wealth, Black entrepreneurs, and the Black community overall. They said some of the strategies that he had were kind of along the lines of tax evasion. You never know. You never know. But clearly, they had him at a point where he didn't want to chance it. And so he would rather pay the $140. So I'll read a bit of the synopsis. Hopefully you all can see the article on the screen. Let me blow it up real quick. Give me 1 second. All right, can everybody see that? Just say yes if you can see it. Put a yes to my IG folks. I know you can't see it yet. There's no technology to share, but it says Robert Smith, the billionaire chief executive of Vista Equity Partners, has reached a $140 million settlement with the Justice Department, ending a year-long criminal tax probe, according to people familiar with the matter. As a part of the settlement, Mr. Smith will enter into a non-prosecution agreement. The people said he will admit liability for additional taxes owed and not properly filing foreign bank account reports. So listen, if you have foreign bank accounts, if you do business overseas, you have to report it all, or else you get into big doo-doo. You don't want to get in big doo-doo. So, you want to keep everything on a hush-hush. Years ago, people were doing business in Switzerland, and that was kind of hush, right? They had this iron tight clad, but guess what? The United States figured out a way to break Switzerland over, get all the information from Switzerland investors. There was a big investigation with a bank called UBS, and they got through that. The U.S. government could just about get through to anything. Same thing happened with Coinbank or CoinDesk. I always get them confused, where all the crypto folks, or a lot of the crypto, not all of them, were kind of hiding their money over there because nobody was reporting cryptocurrency, Bitcoin, Ethereum, those type transactions. But guess what? The IRS broke them too. So listen, there's a war going outside in finance. No man is safe from. You can run, but you can't hide from these streets that's shook by the IRS. So stay out of trouble with the IRS, folks. So just going on with the rest of this. The settlement includes a penalty of $85 million back taxes of roughly $30 million and about $25 million of interest. Damn, IRS be some loan sharking sons of guns. One of the people said it's almost the largest known agreement by a U.S. taxpayer to resolve issues, including undeclared offshore accounts. Again, offshore accounts. All right. So all you folks that be trying to talk about your elaborate tax scheme, you ain't got Robert Smith money. So I would advise you not to go that route. You ain't got enough arms. Your arms are too short to box with God. Just do your taxes, folks. So the settlement is a result of a 4-year criminal inquiry. 4 years. They investigated this man for 4 years by officials in the Justice Department Tax Division and the U.S. Attorney's Office of the Northern District of California. At issue was whether Mrs. Smith failed to pay U.S. taxes on more than $200 million in assets from Caribbean entities set up by the sole investor in Vista's first private equity fund. All right, so Vista Equity Partners, you see this a lot of times. The funds or the private equity funds, they'll have a series of funds. And so what they'll do is they may raise money for the first fund, and let's say it's $1 million. So they get $1 million in the first fund. They go out and they find companies to invest in. And then they close it off, and then they open another one. But this time, instead of raising $1 million, they raise $5 million, right? And then they do it again, right? They find good companies, they return money to the investors when it's done right. And then, they get $5 million. Then once they do it again, they say, you know what? Let's go for $50 million. And then they start another fund for $50 million. And so these private equity funds will own all of these funds and contribute and manage all these funds and these monies. So that's how private equity works. Private equity is actually something the Black community needs more of. There's a young lady by the name of Arlen. I can't think of Arlen, but the name of her company is Backstage Capital. All of y'all should look up Backstage Capital. She's doing a great and wonderful thing. She just got some money from Mark Cuban, the owner of the Dallas Mavericks, to do some investing. So, keep that in mind when we're thinking about Black folks that's doing their thing that are in business. All right. So just to finish off this article, I'm not going to read the whole thing because I don't want to put anybody to sleep or bore any of you. But listen, he had accounts in the Bahamas that he did not declare. All right. Much was at stake in the case of Mr. Smith, Investa, which previously told investors it wasn't a subject of the investigation. They lied. Not good. Institutions that invest in private equity funds have become increasingly focused on corporate governance when deciding where to put their money. Depending on the language of Investa's fund documents, the firm's existing investors might have had the power to pull their money if Mr. Smith had been convicted of a crime, right? So we always say follow the money. That was probably his major incentive. I mean, outside of going to jail, but that was his major incentive for wanting to settle this thing, because he didn't want to lose money, because private equity, venture capital, they get paid on what's called assets under management. So they charge a fee based on the level of assets. So for example, let's say they charge 1%. Now 1% is low, but just lose 1%. 1% of $1 billion is how much? Somebody chime that in the chat. Somebody give me that mathematical answer in the chat. If you get the answer right without using your phone, without using Google, I will give you a free shirt. Shout out to Miss Edith. I believe Miss Edith got her free shirt for winning the contest as well. All right, so Mr. Smith is the wealthiest Black person in the United States with a net worth of more than $5 billion. Founded Vista in 2000 when he was in his late 30s, with $1 billion from a charitable trust established by the family of Houston businessman Robert Brockman. All right. So he got rich with other people's money. He got rich later on in life. And guess what? Robert Smith had a job, and his job allowed him to get where he's at now. So don't let people tell you that you shouldn't get a job. Don't tell you that there's no future in having a job. Don't tell you can't learn anything if you have a job. That is a lie. Robert Smith went to school, got a good job, got some mentorship from some Black folks on Wall Street, and then he was able to launch his own private equity fund. Very much heavy in the technology space. All right. So thank you for that, Don. I do think that's a great lesson for Mrs. Smith. Don't get caught up in the taxes, folks. Please don't. All right. So let's talk about this real quick. So I got that question. Oh, man, what is his name? Because he's got a tag. I want to say his name is Michael. But ETF stocks versus individual stocks. Which one's better? All right. So let's look at this, right? Because the two are not equal. They are different, and you need to understand the difference. So ETFs are a basket of stocks, and we do have ETFs that specialize in holding only dividend stocks. Sometimes they're called dividend aristocrats. And dividend aristocrats are basically people or companies that have paid dividends consistency over like the last 20 plus odd years. All right. So I'm going to bring up, I think you said VYM. All right. So that's Vanguard High Dividend Yield. All right. So he asked me about that. So let's look at that real quick. So he asked about Vanguard Dividend Yield. So what is an ETF? ETF, I've explained it to you before. I will continue explaining it to you again. An ETF is an exchange traded fund. Again, exchange traded fund is much like the mutual fund, but it's a little different. It has a little bit more flexibility. It has better taxation. It has better liquidity because you can trade an ETF throughout the day. You can't trade a mutual fund throughout the day. And usually the expense of an ETF is much lower than a mutual fund, a regular old mutual fund. All right. So let me pull up on the screen here. What I did was I went to Vanguard site and I pulled up VYM. And so we're going to look at VYM because I want you to understand the composition of VYM, ticker symbol VYM. So VYM has 424 stocks in it. VYM holds $35.2 billion. All right. 25% of VYM assets are in its top largest holdings. So remember I said it's a basket or a bucket of stocks, right? ETFs can also be a basket or a bucket of gold. It could be a basket or a bucket of real estate. It could be a basket or a bucket of foreign currency like the Japanese yen or the British pound or the sterling pound. All right, so these are the top 10. These are the top 10 holdings in VYM. So you have Johnson & Johnson. Do me a favor, somebody write these down because I want to look at these. You have Johnson & Johnson, so J&J, Procter & Gamble, JP Morgan Chase. You have Verizon. You have Intel, you have Merck, you have AT&T, you have Pfizer, Comcast, and Bank of America. Now, what's the difference if one person just held Johnson & Johnson? What's the difference if one person held Procter & Gamble versus having VYM? Can anybody tell me that? Anybody get where I'm going with this? Because I want you all to understand what the difference is with holding one stock versus holding a basket or a bucket of stocks. Now, the basket or the bucket of stocks gives you diversification right off the bat. All right. So here it says equity sector diversification. So we have 3.9% of this fund that's in basic materials. Basic materials is a sector in that stock market or the S&P 500. You have consumer goods, you have consumer services, you have financials, you have healthcare, you have industrials, oil and gas, technology, telecom, and utilities. Now, each one of these sectors has a different characteristic than the other or the overall stock market. So if we look at oil and gas prices, have fallen roughly almost 50% for the year. Stocks have fallen a lot because oil and gas stocks like an Exxon or Chevron are tied to oil prices. However, when you look at the technology sector, like an Apple, like a Microsoft, like a Zoom, tech is up. When you look at utilities are basically slow and stodgy. They're very, very boring, but they pay a steady dividend, right? Because when you are paying a steady dividend to your utility company or to your electric company, you are keeping money flowing into them. And so most important thing to any business or any established business is cash flow, right? So utilities get it, but utilities are boring. You're not going to see them skyrocket to the moon on anything or any, like, it would be really weird to see, let's see, the utility company in my area is called PECO, Philadelphia Electric Company. PECO is owned by Exelon. 9 times out of 10, you're not going to see Exelon gain 100 or 50% in any year. It's really boring. It's really, really sleepy. All right. So, when you think about this, again, the whole question was an individual stock versus an ETF. All right. So now here we have at least 10 stocks that we're able to benefit from. We have 10 stocks and we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And they're spread across 10 different sectors. So you got 10 stocks in the top 10, right, that are spread across 10 different sectors. So you are going to get some diversification there. So Don Johnson brings up a great point. Lack of diversification. J&J goes bankrupt, you're ass out. I can say it. Right? So if you put your eggs all in one basket and that company goes bankrupt, you're not going to be able to do anything. You're not going to be able to make any money if you put it in that one basket. That's one of the benefits of an ETF That's one of the drawbacks of having an individual stock. However, what are the probability of J&J going bankrupt? Probably not that high. Probably not that high. So that's one thing. So a lot of these questions y'all ask me about investments really come down to a personal decision. Okay. Because you can look at if we do Johnson and Johnson versus a VYM, I think that actually might be a good comparison. So if you do a Johnson and Johnson versus a VYM, you can look and see what would you rather have. You can look and see what you'd rather deal with. It's almost like, and listen, ladies, forgive me for this, but I can't think of any other analogy right now. I'm not trying to be crude, but it's like having one lady versus having 500 ladies, or like having a harem, right? Yeah, if you have the harem may be cool. It may be around. But if you got that one individual stock or that one individual lady, which one is going to pay you more attention? Which one is going to be more devoted to you? Which one is going to be more loyal? So you run the risk. Let's say this one lady isn't that interested in you. She feels you're boring, and she runs off into the middle of the night with her lawn boy or her pool boy. Then you got a whole bunch of others in your harem, right? That's a chance. However, you probably won't have the same connection. And this is an analogy, y'all, so don't get literal on me. You won't have the same connection with the rest of your harem that you could potentially have with your one lady, right? So there's trade-offs to that. I'm not judging anybody's lifestyle, so let's not get caught up in an analogy. But I'm just saying that there's pros and cons to everything. VY, what is that? Is that the right one? So give me a second. I'm going to pull up VY. This is VYM, correct? Yes, VYM. And it's got a super low expense ratio. So it's 0.06%. So it's pretty cheap. And so I'm just going to switch over here real quick, and we're going to look at, I want to compare VYM to J&J. So which one do y'all think would do better? Do you think VYM would do better? Do you think J&J would do better over time? So just give me 1 second. I'll switch over. So I am pulling up VYM. So listen, while we're waiting for everybody to come in, while we're waiting for everybody to put their answers or their questions in, remember, this is the Wealthy Wednesday segment of the Finance Rebel Show. All right. Add your questions or your comments into the chat. I'm going to work to get all of them. I'm not going to be here with y'all all night because, one, I'm hungry. Y'all know I'll get when I get hungry. 2, it is the tax deadline. So I got some taxes to do before the night's out. I'm helping a friend of mine who got slaughtered with some stuff. And so I'm just trying to be a good friend and help him out. All right. So this is VYM. And so when we look at VYM, can everybody see VYM? Let me make this larger. Now, a lot of these sessions get put out on the podcast, y'all. So who is going to listen to the Finance Rebel Show? Has anybody listened? So as we're talking about that, right, I want to make sure that I also speak to my audience that's a listening audience that I can't see, like my IG audience here. So we see, no, that's not right. I must have the wrong ticker. That doesn't make sense. VYM is like 80 some odd bucks, and here it's telling me it's 83. So let's see. Oh, I know why. Because it's XLM. By the way, XLM's dividend is pretty hefty, folks. Pretty hefty. I think I talked about XLM a few weeks ago. All right, there we go. So we have VYM on the screen. Again, this is Vanguard's high dividend yield ETF. So this is basically a bucket of stocks that are high yielding high yielding dividend stocks. The dividend that's paying right now is 3.42%. 3.42%. And right now it is trading at $8. Excuse me, $83.64. $83.64 is what VYM is trading at. Now we want to compare this. Just want to compare the price to J&J. And J&J is the ticker symbol for Johnson & Johnson. Now, look at that. Can y'all see this? Let me know if y'all can see it. The purple line is the stock price of J&J. The other red and green, they're called they're called candlesticks, but that represents the price of VYM. Can anybody tell me what they see when they see this chart here? So Tiffany said, Lord, I hope your wife got your vittles waiting. Now listen, Tiffany, don't get me in no trouble. I am not a misogynist. I don't expect my wife to cook me dinner, but yes, my wife cooks me dinner. But I don't want no smoke. I don't want no problems. All right, Mid-Atlantic, I see your question. I'm coming to you. Just give me a second. Let's talk about this. Leon, how you doing? Kelly, Kelly's in the building. Hey, Kelly. Kelly, did you do what I asked you to do? I don't think you did. Kelly's my homegirl. Kelly owns Kelly's Closet. Kelly's Closet is the largest, and y'all probably have heard me say this, but I'm going to say it because Kelly's my homie. But Kelly has the largest plus-size lingerie company in the United States. The largest plus-size lingerie company in the United States. Go check out her page. It's Kelly's Closet. K for the Kelly, K for the Closet. All right, you got 2 Ks there. So check her out. She's primarily on Instagram. I'm not sure. Kelly, do you have a Facebook page? But Kelly, chime in. Let me know if you have a Facebook page. And we'll definitely plug that in here. Y'all know I'm all about Black-owned business. But, all right, so when y'all look at that stock, what do you see? So nobody chimed in. Tiffany's talking about my vittles. But what I see is I see correlation. I see tracking. I see that when J&J moves, VYM moves. So these two are highly correlated. Now, remember the VYM ETF pays a dividend of 3.42%. Again, 3.42%. Excuse me. Now, let's look at what J&J pays in terms of dividend. What their yield is. How are they doing? How they living? Now, we can see they move almost in lockstep. We can see that every time one goes up, the other one goes up. When one goes down, the other one goes down. That's actually very important when you're building out a portfolio. You don't want to have a portfolio where all your stocks or all your assets move in the same rate. Okay, so the dividend, the J&J dividend is 4.04%. Again, I'm back. I'm sorry. Johnson & Johnson pays a 4.0% dividend, right? They pay $4 for each person that owns a share, $4.04. So they pay $4 for each person that owns a share. But their dividend yield is only 2.72%. Now, let me show y'all that real quick. So we see that they all kind of move together. Real quick, let me show you this real quick. Give me 1 second as I share this. So, y'all know, I always tell y'all to go to finance.yahoo.com when you want to look up anything real quick. It's not for in-depth research. It's just for looking up something real quick. Kay Landers 215, thanks for joining us. She says, well, so the HBCU students won't get their bills paid. Nah, I think they're good. Referring to Robert Smith and his gracious gift to Morehouse College, paying their tuition, paying their student loans. Big point though, right? And I always like to make this point because I think we got to give credit where credit is due. A lot of people was hailing Robert Smith as the next black savior for what he did with Morehouse. And listen, he deserves all the kudos, all the glory, all the flowers for what he did with Morehouse. But guess who was doing it before him? Oprah Winfrey. Oprah Winfrey was doing it before him. Been doing it for a long time. And guess what? She was not paying student loans, right? And this isn't a competition. I just want to bring out the point. She was actually paying tuition. So if you're going to give kudos to Robert, give kudos to the black woman too, y'all. Please, 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 please. All right. So J&J, back to J&J. J&J pays a lower dividend than the ETF. But you might look at it and say, well, why is it lower? Well, it's probably lower because it's experienced more price appreciation or going up in price a lot higher lately. And so as it's going up higher, it's why did that change? As it's going up higher, it is the dividend yield drops, if that makes sense. So imagine you own a company and you say, I'm going to pay you $1. I'm going to pay you $1 for every share of stock you own. And let's say the shares are $10. All right. So you get a 10% dividend. So for every share you own, you get $1. Stocks are only $10. So every share you buy, you spend $10 and you're not guaranteed, but you will get $1 in dividend back. So it's 10%. Now, stock price goes up to $20. Can anybody guess what their dividend yield's going to be? Anybody? Bueller? Because nobody answered my other question either. So I guess nobody wants a t-shirt. Tiffany, I didn't skip your question. I don't think I did. I'll go back. I'll go back and look. But listen, if the stock goes to $20, right, and they're still paying $1 in dividend, so the stock price is $20, the dividend's still $1. The dividend yield is now 5%. All right, so as the stock price goes up, it can make the dividend yield go lower. Guess what happens if the stock price goes down? Dividend yield goes higher. So you get more bang for your buck if the stock price falls. However, you get bang for your buck if the stock price goes up because you get price appreciation. So it just really depends on what's going on. So, sometimes I struggle with sharing the dividend yield with y'all. And what I mean by sharing is I like to make sure everything is understandable and relatable. And like, I don't want to just be my mouth and kikiing at y'all and y'all don't understand what I'm saying. That's a waste of everybody's time. So I try to put it where the goats can get it. All right. Make it simple and plain. So again, we have this stock and we have this ETF. Now, another ETF or another stock that is being held in VYM is, can anybody remember what it was? Procter & Gamble. So let's look up Procter & Gamble right now. I want y'all to remember that VYM, and I'm going to write this down myself so I don't forget, but VYM's dividend yield is 3.42%. J&J's dividend yield is 2.72%. All right. So we're just going to look at it and analyze it real quick. I don't want to bore you all. Let me know. Am I boring y'all? Is this boring y'all? I don't want to bore y'all. But let's go back and let's look at Procter & Gamble. Procter & Gamble's ticker symbol was PJ. Yes. So Procter & Gamble pays $3.16 per share that you own. For every share that you own or every share that's owned, they get $3.16. The stock price right now is $144.04. The dividend yield is 2.9%. 2.19%. Again, 2.19%. That is the dividend yield for Procter & Gamble. And let me go back and put that back up on the screen so everyone can see. So again, this dividend is lower than VYM, JP Morgan Chase. So typically the biggest dividend payers are banks and energy companies. Typically. And so now we're going to look up JP Morgan Chase. So JP Morgan Chase trading right now $100.22. I'm still really interested to see if JP Morgan is going to make good on its $30 billion pledge to the black community for small business loans, for mortgages. and even hiring. Now, JP Morgan Chase's dividend, $3.60. That's the dollar amount they pay for each share that a person owns. For everybody that has one share of JP Morgan stock will get $3.60. The dividend yield is 3.57%. All right. So if you divide it, divide 3.6 or $3.60 into 100, you'll get roughly 3.6%. All right. It's 3.57%. That yield is actually higher than VYM's. So I'm gonna stop there because nobody gave me the answer. But when you average these up, all of the performance gets averaged up, right? Averaged together. So JP Morgan's dividend gets averaged with Procter & Gamble, gets averaged with JP Morgan, and so forth and so on, because there's 424 stocks in that ETF. And so when you average them all up, typically it's going to be lower than any one individual stock. It's typically going to be lower. The dividend yield is going to be typically lower than any one stock. Usually, there are exceptions. So there are stocks, however, I bet if I go back to VYM, let me pull up VYM and let's look up. I'm sure there is a stock there that pays or that has a higher dividend yield than a VYM as a whole. Because typically what happens with these baskets, with these buckets, you're averaging everything together by the weight, right? So some stocks have a different weighting than other. And it typically pulls the highest value down. Does that make sense to y'all? Let me know if you're understanding what I'm talking about. So Merck, Intel, Verizon. Okay, I know for certain Verizon has a higher dividend yield than VYM. So let's pull up Verizon real quick. Verizon's ticker symbol is VZ. And they pay a 4.23%. Does anybody remember what the dividend yield was for VYM? Anybody remember? Put it in the chat. Tell me what you're working with. Sheila, see you or see you too. Oh, Sheila, see you too. How you doing? Thanks for joining. Some of these are getting jumbled up together. Business Savvy, thanks for joining us. Mid-Atlantic still in the building. Appreciate you being here. What's 100 million Mid-Atlantic? Big Man Tech. There's a delay on YouTube. Is there a delay on YouTube, y'all? Is that on my side or is Big Man Tech's Wi-Fi janky? I'm sure Big Man Tech's Wi-Fi shouldn't be janky because he's Big Man Tech. All right. Thank you, Monica Taylor Jackson. She remembered it. VYM's ticker, VYM's dividend yield is $3.42. All right. And let me know, y'all, if anything is delaying on the YouTube or Facebook side. All right. So I don't know why I'm messing it up, y'all. 3.42%. All right. So Tiffany Thompson said, no, there's no lag on the YouTube side. All right, Miss Edie comes through with it as well. So, Big Man Tech, your Wi-Fi janky. Go get new Wi-Fi. Cynthia Staley says the same thing. I'm getting you back for busting on me the other time. Big Man Tech. Big Man, did you put out a video? I haven't seen a video. All right, folks, so I'm going to stop messing with my friend Big Man Tech. So, again, VYM is 3.42%. All right. Verizon, let's go back to Verizon. Verizon is, I wish that was bigger. I don't think y'all can see Verizon. But again, Verizon's dividend yield is 4.23%. Verizon right now is trading at 5.43%. Excuse me, oh my God, y'all I'm messing up. Verizon's trading at $58.43. Again, $58.48. It pays a $2.51 dividend per stock. Per stock you own, you get $2.51. All right. So, but clearly that dividend yield is higher than VYM. So it tends to average down. So, there's your pros and cons. If you're trying to get a bigger gain, you might want to go for the individual stock, right? If you want if you have, let's say, if you have volatility issues, right? If you, I was going to give you another relationship analogy, but I ain't going to do it because I don't want to get in trouble. But if you like it smooth and steady, if you like things smooth and steady, you get an ETF. If you're okay with the volatility and the craziness of the market, and you think it's a good company, you can go with individual stock. Again, remember, when you're buying a stock, you're buying a piece of a business, you're becoming an owner, and everything we're talking about is from a long-term perspective, folks. From a long-term perspective. Now, Tiffany, you said I missed your question or I skipped your question. I hope I answered. I want to say it was Michael. I be forgetting y'all. I be forgetting people's names because everybody has their screen name up, and I forget their real name. All right, Tiffany. So, Tiffany, I am now searching for your question. Give me a sign. Tell me where it is. All right, Don's the man. Like Don's like super rich. He's like rich, y'all. He says my dividend portfolio has both individual stocks and ETFs. So Don, let the people know, why do you pick dividend stocks and ETFs, and what is your deciding factor for the two, if you don't mind sharing with the community? All right, so Monica Taylor Jackson, Tiffany, I didn't see your question yet. Do me a favor, put it back in the chat, and I will scroll right back to the bottom once I'm done with Monica. So Monica says, how do we know if the new ETF QQQJ is a good investment? Or let's look up QQQJ. Not above that. All right, while I am looking for QQQJ, is it QQQ or Q? Oh, it looks like it is a QQQJ. It's made by Invesco. So Invesco actually makes QQQ. And so QQQ follows and tracks the NASDAQ, which is another benchmark that's followed like the S&P 500 and the Dow Jones, but it's also an actual index as well. It's like the New York Stock Exchange as well. So this is a next gen 100. What are we talking about here? Biz Architect, what's up, bro? How you doing? How's real estate treating you? I'm sure you done sold like 100 doors this year, so I can get $1 from you or something. All right, so this ETF QQQJ looks like it is. Why is it? Come on, give me. It looks like it's the next generation technology fund. So it's looking at the next generation of technology to invest in. So give me one thing. So I'm gonna tell you what I look at when I look at ETFs. I like liquid ETFs, and what do I mean by liquid ETFs? I like ETFs that are traded fairly easily. They have a good amount of volume in them. That means they have a certain level of popularity, if you want to get right down to it. I don't want to trade ETFs that don't have a good amount of liquidity in them, because sometimes, not always, but sometimes you can get stuck with some of these when you want to do a trade. Now, that's my thinking from, hey, Ed's wife. That's my thinking from years in training in the institutional side with dealing with big Wall Street banks. When I'm trying to do a trade, if you're a smaller trader or a smaller investor, you really don't have those issues, but I still kind of follow a lot of those same rules. So usually if it's got less than 50,000, and that's actually low, but if it has less than 50,000, if it has a volume of less than 50,000 trades in a day, I usually will not touch it, just because I don't want the smoke. And usually there's something else that will give me the same equivalent that everything else has, or it gives me the same equivalent of investment that everyone else has on the marketplace. So give me a second, because I'm trying to pull this up. I went to the wrong section of the website. I'm trying to pull this up so we can actually look at the investments that are held inside of QQQJ. But it's not cooperating with me, y'all. Tell it to be nice. Tell it to be nice. I don't want. All right, we're going to figure this out real quick. Real quick. Everybody's website is a little bit different. So when you're trying to factor in and figure out what you're trying to get to, you got to play around with it a little bit. So again, Invesco, NASDAQ, Next Gen 100 ETF. So that 100 tells me it probably holds 100 stocks, 100 tech stocks, 100 new to the block tech stocks, like they're new kids on the block for the most part. So let's look at this here. Strategies. So it's factor investing, equal weight. No, that's not what I wanted. All right. So product details. Then the NAS. Let me see. Do I have this up? Tell me if I have this up. No, I don't have it up. All right. Give me 1 second, y'all. Y'all been patient with me. So give me 1 second. I want to share this screen with y'all. Actually, give me 1 second. I apologize to everybody that can't see this, but I will try my best to explain my way through it so everybody can understand it who's watching and everybody can understand it who's listening. By the way, nobody ever told me if they would listen to the podcast or not. Who's been listening to the podcast? So listen, if you can't make these sessions on Wednesday or Saturday, and actually yesterday, I was live yesterday talking about the wealth effect the Supreme Court's going to have on a Black community. If you can't make these sessions, you can always listen to them when you're working out, when you're driving in the car. Nobody's really taking the train that much these days, or not as much as they used to. But you can listen to the show. It is the Finance Rebel Show. You can find it on iTunes. You can find it on Spotify. You can find it on Google Podcasts. And you can find it on Stitcher, anywhere you listen to podcasts. All right. So the Invesco NASDAQ Next Gen 100 fund is based on the NASDAQ Next Generation Index, right? So most ETFs are based on some type of index. All right. The fund will invest at least 90% of its assets in the securities that comprise that index. The index is comprised of securities of the next generation of NASDAQ listed non-financial companies. That is the largest 100 NASDAQ listed companies outside of the NASDAQ 100. All right, so that's a bunch of jargon. That, it's good. It's good to understand. And let's see here. So performance. So it's the ETF is trading at $26.68. $26.68. And I want to see it's got a management fee of 0.15%. That's not bad. Short selling, yeah. So it has all the optionalities or the features that you can normally do. It has 97 holdings. 97 holdings. And its volume is 1.5 million. All right, so I think that's good. All right, it's got plenty of liquidity, so I would say that's fine. Now, here's the thing: it's only got 6.4 million outstanding. So I don't like ETFs that have low asset bases, because usually low asset bases and volume typically are correlated. Typically, not always, but typically. All right. Now let's look at the portfolio. So the top holdings are, again, Okada, OKTA, Marvel Technologies, Trade Desk, Roku, Atlanta Asian, Old Dominion Freight. Now that's not a next line or next gen company. Liberty Broadband, that's not a next gen company either, right? So anytime you get an ETF, you want to kick the hood or open the hood and kick the tires. You want to see what you're getting. You want to look at the overall index as well and just see, how it rocks. Now you see here, this sector here. Is everybody able to see this? Let me take this down real quick. So this sector here is just, a big graph that is depicting what sectors they're in and what the weighting is. So their biggest weighting is information technology. I'm not surprised. 46.17%. NASDAQ is always going to be heavily weighted in technology. That's what they're kind of based on. All right. Healthcare makes up about 19.44% of this portfolio mix. Remember, this is one big pie. The pie equals 100%. So each one of these is what percentage of pie does this sector have in this fund. Our utilities is 1.23%. Consumer staples is about 1%, right? So energy, materials, 1.36%. Y'all should be looking at, if you really wanted to get serious about investing, look at the sectors, look at what they do, look at what they have done over history in different market cycles. Look and see what they did during 07, 08, and 09, during the Great Recession, during that big crash. Look and see what they did during the big crash in March. Look and see what they did in the crash in 87. You can look and see how these sectors perform, and it'll help inform your investment decision-making process. All right. So I would say this is a good ETF. It's done, or it's put out by Invesco. Invesco is a major what I would call a manufacturer of ETFs. It's got good volume. So, I think it's okay. This is not a recommendation. You're only talking about this for educational entertainment purposes only, right? Past performance is not an indicator of future results. Alrighty. So, yep, we got that. So let's see. Doing my acid, IRS go after Dr. Dre. Not that I know of. Why would they go after Dr. Dre? I hope I'm not saying your name wrong, Miss Smith. How about I just say Miss Smith? I want to say Sanita, but I'm not sure. And I don't like messing up people's name. Listen, my name's Kamari. Some of y'all think that's commonplace these days because there are quite a few Kamaris named after me. Not my children. People just like the name. Matter of fact, there's a young lady on YouTube, never met her, don't know her family. When you look me up on YouTube, or when you look up the name Kamari on YouTube, she comes up first. She kicks my butt. All right, so Don said he's cool. Cynthia says he's cool. All right, hold on, Monica. You already got a question in on me. Let me get to Tiffany. Tiffany, did you put that question in? Tashana, I see your question. I will get to it. Give me 1 second. You know what? I'll answer this real quick. Tashana says, do you provide individual sessions? Yes, I do. You are not boring. Thanks for sharing your knowledge. All right, appreciate you. Yes, I do provide individual sessions. You watch one podcast before. All right, but you got to listen to it. Genesis Accounting, how you doing? Tiffany, where's that question at? Or would you just pull in my coattail? Oh, wait a minute, is this it? Do you think companies will go from W-2 to 1099 in the future with the new normal of work from home? What is a 1099? Man, you got layered questions in here. All right, I'll take this one. I don't think I've ever gotten this question before. So do you think companies will go from W-2 to 1099 in the future with the new normal of work from home? What is a 1099? This is something someone said on FB, and I was curious. Well, what exactly did they say? In certain instances, yes, we will see. I mean, we are in the gig economy, right? So we will see people going from W-2 to 1099. But when you look at the Uber drivers, they want to go from 1099 to W-2. And I believe in California, they have gone from 1099 to W-2. I don't know why. You lose a lot of your taxing power. It does require you to have some discipline in order to do it, right? So W-2, just to break it down, W-2 is an employee. They get paid on a W-2. So when they report their tax at the end of the year, they get this form called W-2 from their employer. They take it to the tax preparer, or they go to TurboTax, or they do it themselves, and they prepare their taxes. Again, tax deadline's tomorrow, October 15th. 1099 is a business owner, right? A lot of times people say 1099 worker, 1099 employee. Both of those are incorrect. 1099 is for independent contractors. Now, a lot of times folks, especially new business owners, they want all 1099 people. Major mistake, because they think it's more expensive to have employees. It can be by a smidgen, not that much. All right. But they want to make everybody, again, a 1099 independent contractor because they feel it's going to be cheaper. And sometimes, folks want to get paid under the table. Now, when you get paid under the table, you don't get a 1099 or a W-2, and it's actually illegal, but people do it. People do what they do. You get it how you get it. There's no judgment. All right. So when people do that, again, their motivation usually is what's easier, what's cheaper. Now, the IRS and the Department of Labor, state and federal, don't view W-2s and independent contractors as the same. They do not. They view them as different. W-2 is a worker. 1099 is an independent contractor. They're in business for themselves. But again, like I said, a lot of employees, period, try to categorize everybody as an independent contractor and give them a 1099 at the end of the year for them to do their taxes. But guess what? I've been through a couple of these audits. A lot of times when these quote unquote workers, contractors, employees, whatever label you want to put on them, when the work runs out or when they have to be laid off or the stoppage goes, they will go file unemployment. And what happens is they'll give unemployment your address, your company name, and unemployment will start doing their research, right? And for those who listen to the podcast, I was air typing. So they will do that. They will look it up. And then what happens is, and I've seen this again several times, they will go back to the employer and they will say, hey, you had this guy listed as a 1099. He's not a 1099 employee. He's not a 1099 worker. He is not an independent contractor. He, in fact, is an employee, and he should be treated as such. So when you are an employee, you're entitled to some things over time. And it varies. I want to say anything over 35 hours in 1 week gets you overtime, but we know, typically anything over 40 hours in 1 week is definitely overtime. So that's time and a half. All right. So the pace should be different. A lot of times you are supposed to take breaks. You're supposed to get lunch. And I know people that have gotten fines. I know one guy who was a friend of mine who just got $29,000 fine for not labeling his people as employees when they should be employees, right? Gave them 1099s, and they also found that they weren't getting their proper breaks. They weren't checking in or punching the clock. And all of those things have grave issues and problems if you don't classify the people that are working and the benefit of your business, whether they are an employee and or a independent contractor. But they are different. Yes, you have a lot of new people working from home. Again, it could go both ways. Now, typically there's like this test. I can't think of it all. It's like three things. It's financial, right? What kind of financial relationship do you have with the person, right? Is the person working under an entity? Like, are they an LLC? Are they a corporation? Or is it just an individual, right? And then again, do they get paid per hour or do they get paid per project, right? Do you have control over them? Meaning, do you tell them when to get to work? Do you tell them how to work? Do you tell them what to wear to work? If you say yes to any of those things, or if the person has control over any of those things, 9 times out of 10, they are an employee, and you must treat them as such. And you must also pay into Social Security and Medicare for them as well. So that's part of the reason why they do it. So I see a future with both. I see a future definitely with more work from home. I don't think everything is going to shut down though because of COVID. I think people want to get out the house. I think people were tired of being stuck in a house with their kids and their spouses. We've seen a sharp increase of domestic violence. Sadly, people can't get along with their spouses. People haven't done the work, or maybe they just married or got with the wrong people. It's sad either way. But yes, I do think it's on the rise. But again, 1099 or W-2, we're going to see both. We're going to see people hiring, and they'll be W-2, they'll be real employees. And we're going to see people looking to work with, I don't want to say hire, but let's say hire for this conversation, hire and work with independent contractors. They are not employees. They get 1099s as well. So I hope that answers your question. So Don says, I think having an ETF gives you the instant diversification. Having individual companies is having ownership in those companies, and ownership is key. Well, guess what, Don? Even through an ETF, you still have ownership of those companies. And I will say this because I think a lot of people, they over, what's the word I'm looking for? They lean on diversification too much. So when you look at what most of these people in the industry, in the financial services industry, call diversification, it's not diversification at all. Usually what they say is diversification is but you get you to put your money into multiple ETFs or mutual funds that move the same way. Now, remember I showed you that drawing with VYM versus J&J? They kind of move lockstep. No diversification in there at all. And what I mean by diversification is there's no diversification for price movement. Their price movement was perfectly or almost identical. So when the market's going up, both of them are going to go up at the same time. When the market's going down, both of them are going to go down at the same time. Not trying to get extra nerdy on y'all tonight, but I want people to really start thinking about diversification, because there's a lot of things that the industry puts out that I think is a misnomer. And you really got to dig into it. Now, if you have stock and you have, let's say, a rental property, well, your rental property, the value of the property is going to move much slower typically than the stock market a lot of times, but it's different. But the asset pricing doesn't move in the same way. Listen, if everybody's understood that point, tell me yes, you understood. All right. All right. So Genesis Accounting says, yeah, if people reporting to an office each day, they are definitely employed. Yep, that is correct. However, there are some independent contractors that fit that mold too. Mention a change from 1099 miscellaneous to 1099 NEC. You know what? I do see that changing. I forget exactly what the change is, but I'm not totally sure. Chime in. Hey, Dr. Tara, how you doing? Oh, Mid-Atlantic said 10 million is 1% of a billion. Yes, you are correct. All right, so Mid-Atlantic, you get the shirt. You get the shirt. So Mid-Atlantic, do me a favor, inbox me. I need to. Battery's low on IG. I need to have you send me an inbox of what you want. Let me see real quick. Let me pull this up real quick. Give me 2 seconds, y'all. Give me 2 seconds. Because I am looking for the link. So do me a favor, go to bit.ly. All right, bit.ly/FR_store. All right, STORE. Again, bit.ly//store. You know what? I want to put it in the link as well. So give me 1 second, y'all. I just want to show y'all what he's going to give us. Edith got one of these. Leo Lady. I think I saw Leo Lady on. Leo Lady got a hoodie as well for answering some questions. So listen, man, this is a participation game. I'm not just here to talk at y'all. I want to talk with y'all. There's a difference. My ego isn't that big that I think y'all just super interested in what I got to say all day long. I want to talk to the questions and concerns you have on your heart, not just what I want to talk about. That ain't no fun. My mother taught me a long time ago, I, me, my, and I is boring. Anybody agree with that? So here, I'm going to show y'all this real quick. Let me share the screen. And Mid-Atlantic, if you are able to come over to Facebook or YouTube and see some of these. So Miss Edith got a sweatshirt there. All right, you can see these. Miss Edith got a sweatshirt and Miss Edith got a cup. All right, so listen, if anybody wants to support the Finance Rebel movement, feel free and go on over, cop y'all some merch, rock it, take a picture of it, and let everybody know you are now officially a Finance Rebel. So I will put this link in the comments if anybody is interested. There we go. There we go. All right. So I know I got some more questions. I don't want to bore y'all with the merch. I'm about to come out with some new stuff too, some new designs. This is the new mug right here, this black one. I like that one. I need to get my own cell phone cover for my phone, but it's hoodie season, so cop y'all a Finance Rebel hoodie, y'all. So, all right, let me see. So, Tiffany, I got your question. Let's see what we're working with here. What else we got? I believe I have some questions over on IG as well. Did I see some questions over here? Big Man Tech is messing with me. Oh, okay. Big Man Tech, I appreciate it. You watching YouTube and IG. Big Man Tech is helping me fight the algos. The algos be smacking me around, y'all. So if you want to help me fight the algos and rage against the machine, do me a favor, like, comment, and share. Like, comment, and share this out no matter what platform you are on. If you have a question and you're on IG, do me a favor, throw it in the question box at the bottom. And that way I get alerted. I don't lose it, because sometimes the chat gets going really, really fast. Sometimes it moves slow, but I can never, ever predict it. So throw it in the question so I can get it. I don't see any questions on IG. If I missed you, I apologize. But I know I do have some more questions over on Facebook. Oh, okay. You know what, Mid-Atlantic, I thought you did have a question. All right, so new homeowner, primary residence, would like to get investment property next. Is there a time frame I have to wait or not? Oh, man, you should have asked me that question when Robert Lewis was on last week. He is our resident mortgage agent or mortgage lender, our resident mortgage lender. Do me a favor, go to Lend to USA. Look up Lend, Lend, to the number 2, USA. Send Robert Lewis an inbox. He's a cool dude. He'll probably tell you if you can afford it. Interest rates are super duper low right now. Not sure where they're at today, but let's look. But he'll probably tell you if you can afford it, right? Why not? If you can afford it, if it makes sense for you and your strategy. You know, only person that can tell you that is you. So it looks like interest rates on the 30-year is roughly 3%. All right, so today's 30-year mortgage rates. All right. Today's 30-year mortgage rate. So 10-year fixed rate, that's a mortgage. That's the same price. The mortgage payment is the same over 30 years. It's 3.3%. All right. A 30-year fixed rate VA mortgage. This is for folks who have veteran benefits, 2.9%. So being a veteran does have its benefits at times. All right. Now, if you're super duper balling and you got good cash flow coming in, you might want to think about a 15-year mortgage. And so the 15-year mortgage is coming in at 2.54%. So like 2.5%. So, you know, rates are still good. Rates still look good. People are still buying. COVID has not stopped real estate or purchasing real estate. So, yeah, it could potentially be a good time for you. And I'm assuming, so you said investment property. So, again, I'm not totally sure of what it would be. But again, reach out to Robert and he will take care of you. He will take care of you. Robert actually just did a loan for a client of mine here in the Philadelphia area. Went off without a hitch. He actually just picked up his keys a couple of days ago. So he's good money. He's happy. And he has a super low interest rate mortgage. I think his okay, I saw that. Yeah, I think his mortgage was like 2.75% or something like that. Super low. The rates adjust usually weekly. Yeah, connect with him. He's good people's. Madam Touch, I think this is your first one. What's up, madam? All right, so I know we had a couple more. All right, listen, so if you want some merch from me, you want to help support the Rebel movement, you want to join the rebellion, go on over to bit.ly/FR_store. All right, FR stands for Finance Rebel Store. What are your concerns if Biden Harris wins? None. I have no concerns if Biden Harris wins. None. The dude in office now is a whole clown. He's a racist. He's proven himself to have a long track record of racism. I know y'all don't want to hear me rant about politics, but listen, politics and money are definitely linked. A lot of times we want to try to separate the two. As it relates to the black community, we need to be concerned about both, because our wealth can be stripped away with a pen stroke if it's not protected. So not only do we have to think about making the money, we also have to think about how to protect the money, folks. I know what a lot of people are saying. They're saying the market's going to pull back. They're concerned about Biden raising taxes. You have to realize that Biden raising taxes alone is not going to happen. If the Senate does not turn blue, meaning it doesn't go Democrat, Biden's going to have a hell of a time getting through a tax bill that's going to repel. Plus, there's a lot of other bigger things going on, especially with COVID. We're still not out of the blue with COVID. The economy still has a lot of things going on with it. We need an infrastructure bill desperately. Infrastructure is terrible. A lot of things with infrastructure is terrible. So, you have to keep that in mind. You have to think about those things. It's a process. Voting, elections, politics, it's all a process. And so I don't think taxes would go up right away. It's not to say it won't happen at some point. But as it relates to the markets overall, I think you might see a slight pullback, right? Presidential elections really don't matter. They're a glitch in the radar. Y'all know I am long-term focused. So when I say long-term, 10 years, you might see a pullback for a day, a week, a month, couple months. But the market is run by companies, the profits of companies. Investors key on the profits of companies. Are people going to stop buying Amazon because Biden's in office? I doubt it. By the way, Amazon almost got me because it is Amazon. It's Prime Day. So they then created their own Black Friday and they call it Prime Day and they make billions and billions of dollars. All right. So, it's there. Cynthia says she needs a Galaxy S20 Plus phone case. I think that's available up there. Go check it out. Again, bit.ly, bit.ly/FR_store. Tiffany, you want a hoodie? You want the hoodie I had on? Yeah, that's available in the store too. Listen, you can get whatever color you want. I think there is an orange, there's a red, I even think there's a purple up there. What do you think about the officer involved with Floyd's murder being released? Miss Ed, if you're trying to get me to talk about legal issues, this is a finance show. I talk about the politics stuff because it's politics and finance go together. But what do you think about the officer involved with Floyd murder being released and allowed to leave the state? Do it. So listen, I am not the guy you probably want to talk to about police shootings, right? Because I think police shootings are really sad. I think they're really bad. I think a lot of times we get really, really up in arms and we don't look at the merits of the case. And so sometimes we get up in arms about some of these cases and the DA will charge too high, right? And if you understand the law and the charges, they'll charge too high and then the case will be overturned. The case will be unwon, or the case won't be won, rather, right? And then sometimes there'll be some straight up shenanigans. I'm just going to keep it funky with y'all. It's not the same all the time, though. And every incident isn't the same. I'm not the guy I'm sad about Trayvon. I'm sad about George Floyd. I'm sad about Tamir Rice. But I'm not scared. I'm not upset about the guy who shot the little girl, right? And nobody turned him in and he got found by the cops and he got beat up. I'm sorry. I'm just keeping it real with y'all. Because that person didn't have enough dignity, enough respect for the people in his community to not be shooting in broad daylight and shooting at people. Okay, Cindy, you switching gears on me. Where you at now? You watching both times? But listen, we have a policing problem, period. I don't think anybody can deny that. I do think, all right, so I'm gonna keep it all the way funky. We have a policing problem. But since the Black community a lot of times is not engaged politics in the way I feel, right? These are my opinions. The way that I feel we should, it becomes harder because the more pressure, who hires police, right? Who hires the police commissioner? If it's not elected, 9 times out of 10, it's the mayor or the group of commissioners. if we're not organized enough to put pressure on these people, and we haven't figured out ways to get organized with these people to put pressure on these people, I think we're playing the wrong game. Everybody has their solution. Everybody has their thing. Nobody ever talks about, nobody really is promoting unity though. And I know black people aren't a monolith. I get it. Nobody's alike. However, the Jews aren't a monolith. The Italians aren't a monolith. The Irish aren't a monolith. And they all figure out ways how to work together, apply pressure to the system. They're no smarter than us. They're no better than us. I don't see why we can't do it. But it takes action. It takes thought. It takes a lot. No, Miss Edith, no, it's fine. It's cool. It's cool because listen, I can tell you because I wrote a piece called oh man, I forgot the name of the piece. I'm actually about to make it into a book. But it's how to create black wealth, basically. One of the problems, one of the issues with black wealth has been institutional racism, especially as it relates to police shootings, false arrest, false imprisonment, unfair laws. It's all there. But it's a very deep and nuanced conversation. I find most people are very black and white. So I'll talk about it, but I don't really give y'all everything I'm thinking about it because nobody wants to hear it. Or at least I think nobody wants to hear it. But I did yesterday. I saw there was a comment about the Supreme Court, right? So you did ask about the Supreme Court. I did a whole show yesterday. Matter of fact, Ms. Edith, I think you were on it yesterday. I did a whole show yesterday with Danielle Patterson, who's an attorney and very well experienced in the Philadelphia political landscape, about the benefits, or rather the deficits or the detriment of this new Supreme Court issue that's coming along right now that the guy in the White House has kind of rammed through. Now, why would he ram through a Supreme Court nominee? Now, again, it's hard for me to have these conversations because y'all don't realize the level of, and I really don't care, but I also want to reach people as much as possible. But y'all don't realize the level of what I feel is ignorance. And when I say ignorance, I'm talking about the true definition of the word. I'm not slandering or putting down anybody, but ignorance as it relates to the process. And then we justify our not wanting to be involved with the process because it's always been the same way it was. Well, at what point do we make up our mind and say, well, it's time to change? We are here, right? So this is what I tell people, right? People say, well, they don't want to be involved with the system because the system wasn't made for us. You can't get fair things from a system that was never made for you. But guess what? There's 40 million black folks in the United States of America. I don't think all 40 million or any of the 40 million want to relocate back to Africa or go to the Caribbean or go anywhere else than where they are at right now. So if that is the case, we are here. This is our plight. We are in the fight. How are you going to fight it? Are we just going to sit back and just, have rhetoric or talk about politics and how the band is sticking it to us? Or are we going to get involved? Because there are opportunities to get involved. People don't realize, though, again, politics is a participant sport. You don't just vote and then go home and go to sleep and think there's nothing else to do, right? We have to vote. We have to finance our campaign, our elected officials. We have to finance the people who are running for office. If we want people in there, we have to really get organized, like really, really organized, like organize. That's what we have to do. But it's hard to do that when folks are detracting. I mean, I don't really think we study history enough to think about what Martin Luther King went through, to think about what Malcolm X went through, to think about what Medgar Evers went through, and many, many of the others, right? We have to start really studying our history. There's patterns, there's all kinds of things you'll see when you start studying your history. But until we really get serious, nothing's really going to change. And serious is not about picking a party. So when these knuckleheads tell you that the Democratic Party is a plantation and we should leave, that's a lie, because the Republican Party is a plantation too. Malcolm X told us. So this is what I will say, and I'm gonna get off my political soapbox. Malcolm X's ballot or the bullet is Black folks' Bible. If you are not familiar with it, you are doing yourself a disservice. You should go. It's a speech. Go listen to it. He lays it out perfectly, However, we have not implemented what he's talked about. And I'm not saying it's easy. It's not easy, but listen, things that are very impactful never are going to be easy. So at what point are we going to say, well, you know what, I'm not going to look for the easy road. Building wealth isn't necessarily easy. But I'm going to go the route. I'm going to go the route that helps my children build wealth. And us having legal standing and political standing will definitely help our children have wealth. One thing that Danielle brought up yesterday is if you pay attention to the White House and what they're doing, it's stripping away all the diversity programs, all the affirmative action programs. What is that going to lead to? Well, we saw the one thing where they said we're not doing any more diversity trainings. So all these folks who lack sensitivity, who lack understanding of people who are other than white, aren't going to get training. They're not going to get federal dollars for it. So what happens to that marketplace? Well, there goes that. Why would he do that? Now they're trying to base it on this whole critical race theory. I want to say that they're saying it's not good. I don't think the Cheeto head, the orange head dude can determine what's good or right or wrong when it comes to race. He has absolutely no diversity in the White House. He's got like one dude in there. And he's had lawsuit after lawsuit about his lack of diversity and lack of racial dealings. But again, we don't want to get into the nuance. We want black and white answers. We want immediate answers. Nothing in life is immediate. Even a baby takes 9 months from conception to birth, right? Everything takes time. Like all great things take time, but we don't want time. We're tired of waiting. So, until we get some more maturity, culturally, politically, I think we still got a long road ahead of us, especially as if you look when the Republicans are making moves. So if you looked at how the Republicans took over the country after Obama got in office in 2008, it's very impressive because they took over everything from they took over the Congress, they took over the Senate, they took over the state Congresses, they took over the state Senates, they took over the small offices, they wield power. And right now, even though Donald Trump, I hate the fact that I even said his name, is not a true Republican, is not lockstep with them, they are following along, marching to his beat. Nobody wants to go against him. Everybody wants to kiss the ring. So what do? Do you just go along and get along? Do we just sit on the sidelines? Or when are we going to get involved? Politics actually provides a venue for us to get involved. Voting actually does work. If you really do the studies, you'll see where voting works. But, again, if we can find some people that really want to talk about it at a real level, I would be willing to do whatever I could do to help push the cause. But enough of that. Miss Edith, you got me on a rant. I apologize, everybody. I told you I was going to go get my food. Y'all always wind up having me on longer. Y'all ain't slick. I ain't slick. All right, so Miss Cynthia is watching me on IG and YouTube. She's helping me fight the algos. I should create a shirt called Fight the Algorithms. All right, so Tashana, I'm sorry for the wait. I got a little sidetracked, just a little bit, talking about some non-finance things. But Tashana says, please stick to finance. There's plenty of others who are fighting for civil rights. Protecting money is important. Continue to share and educate. Yeah, but they're intertwined, and I don't think people will realize how intertwined they are. But Tashana, to your point, you had a question. I didn't get to it. So let me go back and get to it because I don't want anybody to be unhappy with me. All right, Cynthia, I see that. Cynthia, I think I'm going to have to do an individual video for you. It's 10 o'clock already. Here we go. Tashana, all right, you asked me, yep. Yes, I do. No, doing mine. You earn more in market returns than index funds. Sometimes yes, most times no. Let me see. Tashana, you asked me a question about booking individual sessions. So let me answer that question. Give me 1 second. Give me 1 second. All right. So if you go to, this is another Bitly link. I have everything on like Bitly links. This makes it easier for me to see. But if you go to bit.ly/book Kamari, you can book a session with me. Now, that's the paid session. If you just have like a 5 or 10 minute question you want to ask me, you think it'll take that long, I do have a free session. If it's longer than that, then yeah, that digs into time and I got to charge. But I try. All right, Miss Angela says keep it going. Nah, I done did enough for tonight. If y'all want to see me talk about some politics stuff, watch the video from yesterday with me and Danielle Patterson. It's on the YouTube page. It's definitely on the YouTube page. I keep seeing everybody jumbled up. Thank you, Miss Angela. All right, do we have any other questions? It's 10 o'clock, y'all. But now, Miss Edith, again, good question. I don't mind them. What did you say? Okay, a finance question. How to get your family, friends, community to change their mindsets and invest or learn about finances. I think you have to show them the possibility, but you also have to find like-minded people. Everybody's not going to be like-minded. Everybody's not going to want to get on the same boat as you. Everybody isn't going to want to go in the same place. So first thing you got to do is, for your youngins, they don't have a choice, right? You just say, listen, this is what we're doing. But for the adults, you have to pose the option. Alton, we talked about PE. Y'all gonna have to start going back and revisiting the back catalog. I need some help. When you watch the back catalog, that lets YouTube and Facebook know people are interested in my stuff. But PE, what is PE ratio? So that'll be the last question of the night. And let me see if I can pull up some quick visuals for that. PE stands for price to earnings ratio. There's all these ratios you'll hear slung around Wall Street and investing. But some are good, some are bad. A lot of people use PE as a way to see if a company is cheap or cheap or overvalued. You'll hear people sometimes say, if the PE is over 20, it's too pricey. But again, it's kind of a floating metric because it depends. Every industry is different. Every company is going to be different. But here is, just one way to look at it. Okay. So price to earnings ratio. It says, what is a price to earnings ratio? And by the way, I am on Investopedia. Investopedia is a great resource to look up things, especially things around investments and money overall. So the price to earnings ratio, PE, right? So it's P divided by E. So it's the stock price divided by the earnings per share. All right. So PE is the ratio for valuing a company that measures its current share price relative to its per share earnings. Remember, I said EPS. The price to earnings ratio is also sometimes known as the price multiplier or the earnings multiple. Okay. And so, man, I don't have this on the big screen. Can y'all see that? Is that big enough? Let's do that. I want y'all to be able to see it. All right. So PE ratios are used by investors and analysts to determine the relative value of a company's shares in apples to apples comparison, right? So if you want to see which company is more overpriced than one, right? So we could take the PE of Microsoft and compare it to the PE of Apple. They're both relatively in the same industry. Their business models are very, very similar. Obviously, Apple now sells more tech, more hardware than Microsoft, but Microsoft sells a little bit with their gaming and some of their other things. All right. So it says it can also be used to compare a company against its own historical record, right? Because your PE will change over time. Now, again, this stuff is, I would say it's intermediate level, but it's good things for you to go study. All right. Remember, none of these things are the golden goose. None of them are etched in stone. None of them are Bible. They are just a part of your overall mix that you can use. You can use. You don't have to use, but you can use to say a company is a good investment or a bad investment, or the timing is off. It might be, you might want to wait for the timing for the stock price to fall because you might feel it's overpriced, right? You might feel, oh man, this stock is undervalued. So I'm finding a gem. I'm finding a stock that is on sale. Okay. Companies that have no earnings or that are losing money do not have a PE ratio. All right. So that's key. Companies that have no earnings or that are losing money do not have a PE ratio, since there is nothing to put in the denominator. The denominator is the lower one for everybody who has missed out on, what was it, math basics or pre-algebra, right? Okay. So here, I'll read these to you all, and then I'll kind of give you some of my other thoughts. So the key takeaways: the price to earnings ratio, PE, relates to a company's share price to its earnings per share. Earnings per share basically is the profit that a company is making divided by the amount of shares that it has out on the marketplace. All right. A high PE ratio could mean that a company's stock is overvalued. I kind of told you all that already. Or else the investors are expecting high growth rates in the future. All right. Companies that have no earnings or that are losing money do not have a PE ratio because there's nothing to put in the denominator. Two kinds of PEs, right? You have a forward and a trailing. So that's what Alton was talking about. So oftentimes we'll go over to, do we have PE here? Go over back to finance.yahoo.com. All right. And somebody throw a stock in the chat for me. Somebody throw a stock in the chat for me so we can actually pull up. Hey, Brittany, how you doing? Brittany, did you see I got the job done? So you don't have to track me down no more. I know you probably hate me. I'm sorry. It took so long for me to get that done. I'm giving you a public apology. Oh, and Brittany, I need another mask. Can you get your mom to make me another mask or some more masks? I'll buy more than one, and I will pay above market price. So Brittany's my homie over at PABJ. Many of y'all don't notice I am the treasurer for the Philadelphia Association of Black Treasurers. Philadelphia Association of Black Journalists. So Brittany works with us over there. Ivy Investors in the house. What's up, Courtney? Courtney, look, I'm trying to be like you and go live. Everybody go follow the Ivy Investor. She's starting to go live a lot more now. Do me a favor, y'all. Somebody put a stock in the chat so I can pull up the PE ratio for y'all. So doing my high PEO means stocks overvalued. That's what you said. Not always, right? So remember, this is totally relative. All right, totally relative. You can have a stock that has a high PE and still will crank out performance and investment gain and price appreciation. Because when people say it's overvalued, they're saying that it shouldn't go much higher because it's out of whack with its overall fundamentals. That's true sometimes. Like if you look at the current price right now, everything's out of whack. Everybody's PE is high. Look at okay, we're going to do Tesla. Sorry, I just saw apps. Cindy, I got you on apps. I'm going to take care of you. Don't worry. Cindy, we were supposed to have another conversation anyway, though. I don't forget. All right, so let's look at Tesla. People I'm pretty sure, just like I got dubbed the Bitcoin hater, I got dubbed the real estate hater. I'm pretty sure I'm going to get dubbed the Tesla hater at some point. So Tesla's PE, I hope everybody can see this, is 1,195. Let me see if I can blow this up a little bit bigger. 1,195, right? So remember, it's an equation. We remember the equation for PE ratio. It's a stock price, which is $461, right? We're just going to round it off to even numbers. Now, it's supposed to be the EPS, earnings per share. So in order for you to have a big top number, your little number must be small. And look at what their bottom number is. This is the denominator. This is the EPS. It's 0.39. So when you take all their earnings across all their shares, it comes up to 39 cents, folks. So when you divide 466. I'm sorry. When you divide 0.39 into 466, you get 1195. So 0.39 divided by, I'm sorry, that's wrong. 0.39 divided by 461. Did I do that wrong? Yeah. 461 divided by 0.39. Right. Is 1182. So when you see that, it's like, wow, where are the profits? Where's the money? Because again, EPS is a representation of profits. Let's look at their financials. All right. So as of 12/31/2009, they had revenue of $24 billion. All right. We're rounding up and down today, folks. We're only dealing with round numbers. Net income from continuing operations was negative 862. Now they sold some things, and so they wound up having a profit. I'm sorry, they didn't have a profit for that year. They wound up having a profit in July. It's like a really small, meager, minor profit. Really, really small, like minuscule. In this case, size matters, folks. All right, so they don't have any profits. So their PE ratio, right, their stock price in comparison to their earnings is out of whack. So, that doesn't mean the stock price won't keep going up. People keep buying it. Remember, price is very much a function of how many people are buying the stock and how many people are selling. The stock market is an auction block. All right. So listen, it's 10:09. I told you I wasn't going to be on here this long. I apologize for not getting here on time. Like I said, I got delayed because I was doing another podcast interview for the Women of Real Estate. Really cool ladies. They wanted to talk about how real estate investors could start investing in the stock market. And I told them real estate investors actually can invest in real estate in the market too. We will definitely come back and do another show, or I'll put out some other videos on that. But in the interim, I'm doing something a little bit different. Y'all know I always give out my text number to text me. Well, I got a new text number, y'all, and it's got some new benefits. So listen, when you submit questions to me for Wealthy Wednesdays or any of the other times I'm on, do me a favor, text them over to me. So you can text them over to me at 215-974-0058. And this is actually more than just texting. It is actually a community. So you can join the community. I'll be active in that community. But anytime I get questions in there, those will likely, or not likely, those more than likely will be the questions that I answer on Wealthy Wednesdays. So I'm trying to consolidate and put things in order so I can live life a little smoother, because I have questions coming from YouTube, Facebook, text, everywhere. So if you want to catch me, if you want to text me, text 215-974-0058. Again, 215-974-0058. I will know who each and every one of you are who I'm texting with. And so I can give you a response, sometimes right away. Sometimes they'll be during Wealthy Wednesdays or on Wealthy Conversations, which is every Saturday at 11:30. All right. Everybody, I appreciate you being here. I appreciate you all with your questions. I appreciate you all coming here every week and checking in with me. Gives me inspiration, keeps me going. I've been getting some great messages too in my inbox with people encouraging me to keep going, because I'll keep it real. Like sometimes, not all the time, but I'm human. Sometimes I look at some of the trash that's floating around out here, and I'll look at like people with these ginormous following counts. Some of them are bots. I know that. And I'm like, why do people follow these people? They're trash. Again, they're trash because they're giving out bad information. And I don't know, to be fair, I don't know if they know that it's trash and they're doing it intentionally, or they just don't have enough experience and or education, or the combination of two, to say that this is bad information. But nonetheless, it's bad information. A lot of people get hurt by it. I don't want to see anybody get hurt. So, I'll tell y'all, if something is not in my wheelhouse, it's not my wheelhouse. I will get another guest. I won't sit up here and fake the funk and lie to y'all and say, hey, I know everything, because that's a lie. Nobody knows everything. Everybody cannot be the master of everything, y'all. All right. So I'll keep posting. I'll be here Saturday. Thank you, Tiffany. I'll definitely keep posting. I appreciate. Wait a minute. Tiffany said, keep posting. I'll keep sharing. I appreciate you, Tiffany. Tiffany's helping me rage against the algos. All right. So I'll be here 11:30 on Saturday morning. I'll also be back next Wednesday. And listen, don't forget, I'm here on Sundays at 7 p.m. Talking about Black Wealth on the Black Wealth Project. So if you want to catch me, you can always catch me. But listen, you'll catch me the fastest and the quickest when you text me. You join my Rebel community, the Finance Rebel community. It's 215-974-0058. All right, everybody. Have a great night. Read up, y'all. Stay informed. Make good decisions. All right. And seek wise counsel. All right. Everybody have a great night. I appreciate you all. Until the next time, stay blessed.